the JSE or any other stock exchange for that matter. Would you be interested? Well, that's what we're talking about in this edition of the Wealth Nation podcast.
Welcome to the Wealth Nation podcast, a podcast for every mother, daughter, grandmother, sister, and wife, and the men who are smart enough to tune in. The Wealth Nation podcast brings you all you need to know about investments, business, property investments, personal finance, and all-around financial wellness. Here is your host, Yolanda Rose.
Hey, this is Yolanda, and thank you for joining me on another edition of the Wealth Nation podcast. I am a financial advisor, a South African financial advisor, and I help folks like you build generational wealth and manage money well. And I do that by putting out what I hope to think is some great content, like on this podcast, for example, also on our YouTube channel, and also lots of other nice guides and resources on our website, social media, TikTok, Facebook, Instagram, and all of that. So link up with us on any one of those platforms. It's financiallyfabulousfemales.com. The Wealth Nations podcast is sponsored by Solomon Wealth Management. Solomon Wealth Management is an innovative team of wealth managers that addresses the entirety of your life, your family, your business, your future, one facet at a time. We use our skill and expertise to the consideration of what you have accumulated, how best to administer it through life's changes, from financial counsel on managing your wealth to careful contemplation of how to transfer it to future generations. It's your vision combined with our skill and expertise to help you reach financial excellence. Reach out to Solomon Wealth Management at www.solomonwealth.co.za for a free wealth management consult. If you're new here, please subscribe to the podcast in whichever channel you're listening on. And also, if you are on Apple iTunes or on Deezer or on Spotify, please leave me an honest review. What do you think about the Wealth Nation podcast? What would you like to hear? What would you like more advice on, more insight on? And let us know. It's Yolanda at financiallyfabulousfemales.com. And we're talking about index investing. For the next couple of weeks, we're going to be doing an index investing series, and we're starting off with what is index investing, and we just hitting the foundations for the beginners. So if it's a new concept, you don't know what index investing is, you are going to want to listen to this. And also this Thursday, we're also kicking off the video series on index investing. So please join us on that platform, Financially Fabulous Females. Index investing, what is it? Well, it's basically investing in index funds, because as an investor, you invest in index funds. But what are index funds? Let's try and make sense of this. Index funds are a type of unit trust or an exchange-traded fund, and we know it by the abbreviation ETF, not to be confused with EFT. So these are either made up with shares or bonds or the various asset classes, and we just finished up our asset classes series a couple of episodes ago. So if you're not familiar with the asset classes, go and check out those episodes. I think it's episode 98, 99, and 100 where we spoke about asset classes. So go and check that out so you know what we're talking about when we refer to asset classes. So these mix of shares and bonds attempt to earn a return as the same as a particular index. So what is an index fund? Well, thousands of indexes track the movements of sectors and markets on a daily basis, and they're used as a gauge of the market's health and performance. Example, the Dow Jones Industrial Average is a broad market index made out of 30 blue chip shares in the United States. The U.S. Global Jets Index tracks the global airline industry as a sector index. So you have these various sector indexes: healthcare, the global jets, they're tracking the airline industry. Then you'll have oil, commodities, agriculture. There are so many thousands of sector indexes that you can invest in.
Raising financially savvy children involves teaching them a variety of skills, from budgeting to planning to earning and saving. Besides giving them an understanding of the value of a rand, it prepares them for real-world finances. Financial literacy is a vital skill, and it is never too early to teach your kids about money. Many parents wonder how they can teach their kids about money and where to find age-appropriate resources. You can now purchase the Financial Literacy for Kids workbook, which is aimed at primary school kids. It's now available at www.financiallyfabulousfemales.com. This workbook provides you with 12 lessons, activities, lesson plans, discussion points, and quizzes that you can use to test your kids' knowledge. Shop now at www.financiallyfabulousfemales.com.
Like what you hear so far? Make sure you never miss a show by subscribing on Apple Podcasts, Spotify, or Tuned In. Now back to the show.
So the index can also act as a market's benchmark or a way to weigh up the performance of the various markets. And you would find that a former president, Donald Trump, always referred to the success of the American economy as to how well a specific index was doing. And the index that he always refers to was the S&P 500. So S&P, Standards & Poor, the guys that actually downgrade us every couple of months or so, these guys have been tracking the top 500 companies in the United States since the 1930s. All right. So this index of the tracking of these 500 companies, people invest in that, the S&P 500, and you'll find a lot of funds in South Africa mimicking the S&P 500. So you can't really invest directly in an index, but you can invest in a fund either through a unit trust or an ETF. And that's what somebody like me does. We sit with you as advisors. We understand your risk, show you your risk profile, identify the asset classes that typically suit your risk profile, and we would suggest, in my case, I suggest a lot of indexable funds because people really don't have the time or the skill to do the various technical analysis that are needed for really in-depth active investing. So an index is you're just passing on the work to somebody else at a really, really small cost. So most index funds copy an index by holding all the index securities. So you'll find a South African fund manager, they would mimic the S&P 500. So if the S&P 500, they're holding the top 500 companies in the US. So it's Apple, it's Google, it's all of the various companies that are American-based. So you'll find that the South African asset manager would then come up with their own S&P 500 funds, trying to get as close as they can to holding the similar sort of investments like the S&P 500. And then we as investors would then go and buy the South African fund because, one, it's a lot easier to access than an American-based fund. And you get to do it with the nice South African wrappers offering you some great tax incentives as well. And again, that's what somebody like me gets to do with you guys as investors. So index funds are passively managed because you really don't need a whole army of actuaries and financial analysis trying to predict the market and buy and sell on a regular basis. You just copy what the S&P 500 is doing and the thousands of other indexes that are out there. So these indexes are passively managed and they tend to hold on to what the indexes hold, and it rarely changes, to try and maximize the returns and minimize the costs. So you're not actively buying and selling as much, so your costs are significantly lower. A lot of unit trusts and a few ETFs are actively managed. And fund managers can trade any sort of security in their market segments as often as they like in an effort to beat the benchmark. So some of my index funds that I often recommend to my clients would be something like the S&P 500, obviously with the South African-based asset companies, the Emerging Markets Fund, the healthcare, especially now, third wave, COVID-19, the health basket of indexes that can be tracked. And also you'll find an index like that's tracking the Japan markets or the Euro Stoxx 50 that tracks the top 50 companies in Europe. So these are the kind of things, the various kind of sectors, various kind of regions that are tracked via the fund, and you basically reduce your risk by investing in an index as opposed to holding the actual shares of the company. So some of the pros of investing in index funds, one, the performance is dependable. The S&P 500 since the 1930s, they've averaged a return of 10% a year for almost 100 years. So that's very dependable for performance right there, as opposed to a share in just one of those companies are very volatile. The costs are lower because they're passively managed. Not much buying or selling happens as you would find with active asset managers. So the costs are much lower. There's a lot of transparency. Especially in South Africa, it's a highly regulated environment. When it comes to the asset managers, the amount of auditing that has to go in, the amount of regulation is crazy. And I know clients as well, you guys often get frustrated with the tons and tons of forms that you guys have to fill in, but it's part of the security for all of us. And it's easy to diversify. In one investment portfolio, you can have a little bit of the S&P 500, a little bit of the emerging markets, a little bit of Japan, a little bit of Europe, a little bit of London, all in one fund. Easy, a couple of strokes on the keyboard, a quick signature, and we can get your investment out there. So when it comes to the funds, you should get the exact same return as the index performs, minus the fund's management costs. And in South Africa, there's some seriously low management fees that are available to you guys as investors. And the funds have a better return than actively managed funds in the long term. If you see some of the research, I'm going to put it up on our website, www.financiallyfabulousfemales.com. Look out for that post on active funds versus passively managed funds, and you'll be able to see the graphs and performances that are available on those two comparisons. Not to say that one is better than the other. I think you can easily have a portfolio that has a good combination of both these investment styles from the fund managers. That's just the beginner's guide on index investing. We spoke about what it's about, what it encompasses. In our next episode, we're gonna dive a little bit deeper, and we're gonna talk about the risks involved in index investing and what you should be looking out for as an investor. So that's it for me on this episode of the Wealth Nation podcast. We'll chat next week.
Thanks for tuning in. Make sure to visit our website at www.financiallyfabulousfemales.com and sign up for our free investment masterclass.